A prolonged rural crisis, scanty and erratic rains, and seasonal change has forced tractor companies to pray for divine intervention. And we're not just talking of good rainfall, but of benevolent God of Budget 2016. And with good reason. Barring a spike in volumes in the financial year 2014, tractor volumes have remained largely stagnant for 4 years. This fiscal may be even worse, with total volumes expected to come in below 500,000 units for the first time in 5 years. This means manufacturers have been sitting on idle capacity and been forced to right-size their workforce. This has also nixed their ability to woo buyers with attractive prices.
Last 1 year is an understatement. Rather, we will take it as another 4 to 5 years as the difficult zone. Excepting one blip in 13-14, more or less the industry was on a stagnant phase. Almost like 5,35,000 kind of a volume is what we were stagnating. But having said that, the question what you asked, how the industry has dealt with, the same industry exactly 10 years back behaved very differently. They were indulging, giving lot of credit, indiscriminate credit. So actually there was a lot of spoiled sport.
NCR-based Escorts is definitely feeling the heat. In the last 5 years, the company has lost market share from a high of 11.4% in the fiscal year 2012 to 10.5% last year. And this looks set to slip to 10.4% by the end of this fiscal year. So all hopes of a turnaround center around better rainfall in 2016 and a boost from new incentives like a higher payout under the Mahatma Gandhi National Rural Employment Guarantee Scheme and a new crop insurance scheme. But there's confidence that this will happen. So are we at a tipping point then?
Of course. See, I think right last year itself the upturn should have started.
Which it did not happen.
Which did not. It came as a surprise. For me, what is surprise is not a year before last year. What was surprise was the last year's stagnation. So we all know the reason of monsoon, whatever has happened. But looking forward, once the uptick starts happening, what we should look for is another conservative estimate, something like 60% in next 4 years, which is a good thing to happen.
60% growth in the next...
Growth over a period of 4 years. Means a CAGR of anywhere around 10 to 12% on an average is on card for the next 4 years.
To ride this growth spurt, Escorts will invest around 200 crore rupees next year, primarily into new product development. The company also promises to win back market share through a new and differentiated product strategy, contours of which will be revealed in the coming months. Sridhar says that this growth spurt will only get stronger if the finance minister indulges the sector in the upcoming budget.
There is a huge possibility for government in terms of even play with the MSPs a little more. One-time bonanza, something if you try to do. A revival of sentiment is also a possibility. So, well, tangible areas, government is certainly working. Some of this emotional area, sentiment revival area, if the government can work, nothing like that. Then what we are talking about 5% to 10%, certainly it will go on 10% plus.
After all, the government had been throwing out strong hints that the focus will be on redressing the rural distress. So if things play out as expected, tractor volumes may finally break the shackles after 4 long years. In New Delhi, Ronojoy, Banerjee.